Turn off your phone notifications right now. Close every other tab you have open. What I'm about to reveal will make you question everything you thought you knew about money. The financial elite don't want you reading this. Your bank certainly doesn't. And the government would prefer you stayed in the dark, because what's unfolding right now is the biggest transfer of wealth in human history. And most people have no idea it's even happening. Let me show you something that will blow your mind. The traditional financial system is collapsing, and the evidence is everywhere if you know where to look. Major financial institutions are quietly changing their strategies, while publicly telling you everything is fine. Banks around the world are struggling with liquidity problems that they won't admit in their quarterly reports. Meanwhile, something else is rising from the ashes of this broken system, and it's not what you think. Everyone talks about inflation eating away at savings accounts and retirement funds losing value. But the real story is what smart money is doing while everyone else panics about grocery prices going up. There's a silent revolution happening in how wealth is being stored and transferred across borders. Traditional barriers that kept ordinary people out of elite financial strategies are crumbling right before our eyes. The institutions that have controlled money for centuries are facing their first real competition. And they're terrified because this time they can't just change the rules to protect themselves. We're watching the birth of a parallel financial system that operates outside government control. No central authority can shut it down, no politician can manipulate it, no bank can freeze it. This isn't theory or speculation anymore. This is mathematical certainty backed by blockchain technology. The code doesn't lie, the algorithms don't have political agendas, and the network doesn't care about your nationality. Bitcoin's network has been running flawlessly for over 15 years, without a single hour of downtime. Compare that to your bank, which goes offline for maintenance, or your credit card that gets declined randomly. The security of this network is maintained by more computing power than all of Google's data centers combined. Every transaction is verified by thousands of independent computers around the world that have no connection to each other. And here's what makes this absolutely revolutionary. Nobody controls it. There's no CEO to arrest, no headquarters to raid, no server to unplug, no board of directors to threaten. Traditional banks require you to ask permission to access your own money. They set limits on how much you can withdraw. They freeze accounts they consider suspicious. They report your activities to governments. Bitcoin requires no permission from anyone, ever. You control your wealth completely with a simple string of words that exists only in your mind if you choose. Try sending $10,000 to someone in another country through a bank. You'll fill out forms, answer questions, pay ridiculous fees, and wait days for the transfer to clear. With Bitcoin, you can send $10 million to anyone anywhere on Earth in 10 minutes. The fee is the same whether you're sending $10 or 10 billion, and nobody can stop you. This is why governments are nervous. This is why banks are scrambling. They're watching their monopoly on money dissolve in real time, and there's nothing they can do about it. Central banks print trillions of dollars out of thin air whenever they feel like it. Your savings lose value every single day because they keep creating more currency units. Bitcoin has a hard cap of 21 million coins that can ever exist. No government can change this, no emergency can override it, no inflation can devalue it through printing. Scarcity is programmed into the code itself, enforced by mathematics that cannot be corrupted. This is digital scarcity, something that has never existed in human history until now. Every 4 years, the rate at which new Bitcoin is created gets cut in half. This is called the halving, and it's written into the protocol that everyone running the network agrees to follow. The next halving is approaching, and history shows what happens after each one. The price doesn't just go up, it explodes to levels that seem impossible before the event. After the 2012 halving, Bitcoin went from $13 to over $1,000. After the 2016 halving, it climbed from $600 to nearly $20,000. Following the 2020 halving, we saw Bitcoin surge from $9,000 to an all-time high above $69,000. The pattern is clear. The supply shock creates a price reaction that defies traditional market logic. And we're heading into the next cycle right now while most people are still debating whether Bitcoin is real. The smart money isn't debating, they're accumulating quietly while prices are still relatively low. Major corporations are adding Bitcoin to their balance sheets as treasury assets. Companies like MicroStrategy have converted billions of dollars of cash reserves into Bitcoin holdings. They understand what most people don't, that holding cash is guaranteed to lose value. Holding Bitcoin is the only way to preserve purchasing power in an era of unlimited money printing. El Salvador made Bitcoin legal tender and bought the dip during every market crash. Their president tweets about buying more Bitcoin while traditional economists mock him, yet their tourism industry is booming. Countries watching what El Salvador is doing are taking notes. Several nations are exploring similar moves because they see the writing on the wall about dollar dominance ending. The institutional investors, who called Bitcoin a scam 5 years ago, are now buying it. Hedge funds, pension funds, sovereign wealth funds, they're all entering the market. BlackRock, the world's largest asset manager, launched a Bitcoin ETF that attracted billions in days. These are not reckless gamblers. These are the most conservative money managers on the planet. When BlackRock moves into an asset class, it's not speculation anymore. It's validation that Bitcoin has become a legitimate store of value that institutions must hold. Fidelity has a digital assets division managing Bitcoin for wealthy clients. Goldman Sachs offers Bitcoin to their private wealth management customers despite calling it rat poison just years ago. JP Morgan Chase, whose CEO once called Bitcoin a fraud, now offers Bitcoin exposure to clients. Even the banks that fought hardest against cryptocurrency have surrendered to reality. This institutional adoption is creating a supply crisis that most people don't understand yet. Bitcoin's supply is fixed, but demand is accelerating from the largest pools of capital in the world. Simple economics tells you what happens when demand outpaces fixed supply. Price goes up, and with Bitcoin's unique properties, price can go up exponentially. There are roughly 60 million millionaires in the world today. If each of them wanted to own just one whole Bitcoin, there wouldn't be enough to go around. 21 million is the maximum supply, and several million Bitcoin are lost forever in forgotten wallets. The actual available supply is much smaller than people realize. Add in the Bitcoin already held by long-term investors who will never sell. Factor in the coins held by corporations on their balance sheets that are locked up for years. Consider the Bitcoin being accumulated by nation-states who are diversifying reserves. The amount of Bitcoin actually available for purchase right now is shockingly small. This is the supply shock that's coming, and when it hits, price discovery will be violent. We're not talking about Bitcoin going up 10 or 20%. We're talking about multiples of current value. Some analysts predict Bitcoin will reach $100,000 per coin. Others see it going to $500,000 or even $1 million within this decade. These aren't wild guesses. They're based on mathematical models of supply and demand. They're based on historical cycles that have repeated with remarkable consistency. The stock-to-flow model has predicted Bitcoin's price movements with eerie accuracy. It suggests we're entering a phase where six-figure Bitcoin becomes inevitable, not possible. Meanwhile, your savings account pays you less than 1% interest annually. Inflation is running at real rates much higher than official government numbers admit. Your dollars are losing purchasing power every single day you hold them. The house you could have bought last year now costs $50,000 more for the same property. The car that was $30,000 is now $40,000 for the same model. Groceries that cost $100 now cost $140 for the same cart. This is the hidden tax of inflation, the silent theft of your wealth. And it's accelerating because governments have no choice but to keep printing money. They have debts they can never repay with tax revenue. They have promises they can never keep without creating new currency units from nothing. The only escape is assets that can't be inflated away by printing. Real estate works but requires massive capital and can be taxed or seized. Stocks work but are tied to companies that can fail or be regulated. Commodities work but are hard to store and expensive to secure. Bitcoin works and requires no permission, no storage facility, no insurance policy. You can store $1 billion worth in your head by memorizing 12 words. Try doing that with gold bars or real estate deeds. Try fleeing a country with your wealth if it's tied up in physical assets. Bitcoin is portable wealth that crosses borders invisibly and instantly. It's property rights enforced by mathematics instead of governments that can change their minds. This is why Bitcoin adoption is exploding in countries with unstable currencies. People in Venezuela, Argentina, Turkey, Nigeria, they get it because they've lived through currency collapse. Americans think it can't happen here because the dollar has been stable their whole lives. But every empire in history thought their currency would last forever, and every single one was wrong. The Roman denarius failed, the British pound lost reserve status, the list goes on. The dollar will be no exception. It's already losing global dominance as we speak. Countries are settling trade in currencies other than dollars for the first time in generations. The petrodollar system that has backed U.S. currency for 50 years is crumbling. Saudi Arabia is accepting yuan for oil sales. China and Russia conduct massive trade without touching dollars at all. The BRICS nations are building alternative payment systems to bypass Western financial rails. This is dollarization happening in real time, while American media barely mentions it. As dollar dominance fades, countries need something neutral to hold as reserves. Gold is one option, but gold is heavy, hard to move, and difficult to verify. Bitcoin is the digital equivalent of gold, but better in almost every way. It's more portable, more divisible, easier to verify, impossible to counterfeit. You can audit the entire Bitcoin supply in minutes by checking the blockchain. Try auditing Fort Knox to verify the US gold reserves. They won't even let you in. Bitcoin's transparency is its strength, not its weakness. Every transaction is recorded on a public ledger that anyone can verify independently. This makes Bitcoin the most honest money ever created. No hidden inflation, no secret debasement, no printing press running in the basement. The inflation rate of Bitcoin is known years in advance by anyone who can read code. Compare that to central banks that change policy on a whim based on political pressure. When COVID hit, Governments printed trillions overnight without asking anyone's permission. Bitcoin's supply didn't change by a single Satoshi because the code doesn't care about pandemics. This predictability is incredibly valuable in an uncertain world. Businesses can plan, individuals can save, nations can reserve without fear of surprise devaluation. The technology behind Bitcoin is being adopted far beyond just currency. The blockchain concept is revolutionizing supply chains, legal contracts, property records, voting systems. But Bitcoin itself remains the purest application of the technology. It does one thing and does it perfectly. It's unstoppable digital money. Ethereum and other platforms try to do everything, which makes them complex and vulnerable. Bitcoin's simplicity is its superpower. It's focused entirely on being the best money possible. The Bitcoin network processes trillions of dollars in value securely every year. It has never been hacked, never been shut down, never failed to process a valid transaction. Banks get hacked constantly. Credit card companies suffer breaches. Exchanges get robbed. But the Bitcoin blockchain itself remains impenetrable after 15 years of attacks. This security comes from the decentralized nature of the network. There's no central point of failure, no single server to compromise, no database to corrupt. Thousands of nodes run independently by volunteers around the world maintain identical copies. If one goes down, the other thousands keep the network running without interruption. This is resilience that no traditional financial system can match. This is why Bitcoin will outlast the banks that currently mock it. The younger generation understands this intuitively. They've grown up with digital everything and don't trust institutions that failed their parents in 2008. Millennials and Gen Z are buying Bitcoin at rates that terrify traditional financial advisors. They're skipping stocks and bonds and going straight to cryptocurrency. This generational shift in how people view money cannot be reversed. You can't convince someone who grew up with smartphones that paper money is the future. The wealth transfer from boomers to younger generations over the next 20 years is enormous, and that wealth is going into assets that make sense to digital natives, not into the same old system. Traditional advisors tell you to buy index funds and hold for 30 years. That advice worked when the dollar was stable and the system was trusted. But we're entering a new era where the rules have changed. The old playbook doesn't work when the currency itself is the problem. Holding Bitcoin is not gambling if you understand what it is. Gambling is trusting that governments won't destroy the value of your paper currency. Bitcoin is insurance against the incompetence and corruption of central banks. It's a lifeboat on a ship that's taking on water while the crew tells you everything is fine. The captain might be smiling and the band might still be playing. But the water is rising and the lifeboats are filling up fast with people who see reality. You can choose to believe the official narrative that everything is under control, or you can look at what the smart money is actually doing with their wealth. They're converting paper into hard assets. They're moving out of pure cash positions. They're buying Bitcoin, they're buying gold, they're buying real estate, they're buying anything that can't be printed. This is the Great Awakening, the moment when people realize money is broken. And Bitcoin is the solution that was built specifically for this moment. Satoshi Nakamoto, whoever that person or group was, saw this coming. They created Bitcoin in 2009, right after the financial crisis, as a response to bank bailouts. The first Bitcoin block contains a message about banks needing bailouts. This wasn't an accident, it was a statement of purpose, a declaration of independence from failed monetary policy. Bitcoin is the peaceful revolution against a system that serves the few at the expense of the many. It's the separation of money and state, the same way we separated church and state. Governments should not control money any more than they should control religion. History proves they abuse the power every single time without exception. Bitcoin removes that power permanently by making money a protocol instead of a policy. It's money run by code instead of committees, by math instead of men. This is the future, whether governments like it or not. They can ban it in their country, and it will thrive everywhere else while their citizens suffer. They can regulate it, and it will adapt around the regulations. They can fight it, and they will lose because you cannot fight mathematics. The question isn't whether Bitcoin will succeed, that's already been answered. The question is whether you'll participate before the price goes beyond reach. Right now, Bitcoin is still affordable for average people to accumulate. You don't need to buy whole coins. You can buy fractions down to 100 millionth of a coin. Start with whatever you can afford to set aside. Dollar cost average by buying a fixed amount every week or month regardless of price. This strategy removes the stress of trying to time the market perfectly. You buy in bull markets, you buy in bear markets, you accumulate over time. The people who got rich from Bitcoin didn't trade it constantly. They bought it and held it through volatility that would have scared away weak hands. Patience is the key to wealth in Bitcoin. Time in the market beats timing the market, especially with an asset whose long-term trajectory is up. Short-term price swings don't matter if your time horizon is years. Bitcoin dropped 80% multiple times in its history and still made early holders wealthy. The current price might seem high compared to last year, but it will seem cheap compared to 5 years from now based on every cycle Bitcoin has ever had. This is your chance to get positioned before the next wave hits, before institutional buying absorbs all available supply, before nations add it to reserves, before the price reaches levels where ordinary people are priced out completely, before owning even a fraction of a Bitcoin becomes a luxury. The window is closing faster than most people realize. Every day that passes, more Bitcoin moves from weak hands to strong hands who will never sell. Every day that passes, more smart money accumulates while retail investors wait for confirmation. By the time confirmation comes, the opportunity will have passed. Don't wait for your financial advisor to recommend Bitcoin. They're incentivized to keep you in products that pay them commissions, not in assets that set you free.